In this video, I wanted to cover super investors. It's the time in the quarter where super investors are revealing what they own, what they're buying, what they're selling. And the information could be quite useful. I like looking at it and getting a few ideas, maybe validating that I'm seeing a few trends and they validate it. I also can draw out that maybe some particular trends are beginning to take shape and I can get into a positive trade early. I wanted to go through super investor data. The primary source of this video is going to be datarama.com. It's a really good website, and I'm going to put the details of that website on the details of this video. But big props to this website. They really provide a lot of useful information. Now, as it is the case in investing, there's too much information available. You can spend 24 hours a day analyzing information, reading, and so forth, trying to interpret, understand information. So it's really important that you really isolate and be very picky on what information you're going to use, what information is helpful to you in your portfolio and the objectives you have in your portfolio. For me, I have particular objectives. I'm 55, heading toward retirement, taking care of my family, having fun trading, taking some chances just to make sure that I really enjoy investing, the positives, the ups and the downs. Now, I isolate down to a couple pieces on this website. I'm going to go through those pieces and share with you what I'm seeing, what trends I'm picking up, and what ideas are I'm walking away with after reviewing this website. So as we go into the website, one thing I'll put out there, word of caution, is I just don't look at one super investor and just replicate what they're doing. I don't think that's a wise idea. I think that's a bit risky. Super investors, for example, Warren Buffett, probably the most famous one. He made his Coca-Cola investment decades ago, back when Coca-Cola and the environment, technology stocks weren't really that popular. It was very different. Well, I'm not going to buy Coca-Cola just because Warren Buffett owns it. I'm going to really analyze companies and make sure that companies that I'm picking really fit my portfolio and are aligned with the objectives that I have for my portfolio. But nothing bad about Warren Buffett. He's awesome. So I'm going to isolate a couple things. First, I'm going to go over the stats that are provided on the website, the super investor stats, because I think it really aggregates data well. And I'm drawing a few really good pearls of value from that data. And then I'm going to look at Pat Dorsey's portfolio because I read Pat Dorsey's book. The guy is just super sharp, understandable. I understand him. I get what he's trying to do. I really like his portfolio. So I'm going to look at his portfolio. All right. So let's look at the super investor stats. First, the top most owned stocks on the stock market. And this is kind of like the usual suspects of really valuable companies. No big surprises here. United Healthcare is showing up. FYI, I think healthcare is going to do really well going forward. We're in a part, or I should say, the economy is not headed toward a bad recession, but it's not growing, tremendously. It's kind of like just the in between. And healthcare should do quite well because it hasn't done great over the last couple of years. And I think it's really setting up to do well. So I'm drawing that, hey, this healthcare payer, United Healthcare is a real positive one. I happen to own Elevance. I think Elevance has better fundamentals. I used to own United Healthcare and I switched from United Healthcare to Elevance, and I'm glad I did so. I'm very happy with my return on Elevance. So I noticed that. Now, when I look at big bets, Carvana is out there. That's certainly been a real winner. I've looked at it. It's not the right one for me. But this one here, Alpha Metallurgical Resources, these guys are in the area of coal, and their coal ends up in steel. But I've looked at a couple of coal companies. In fact, one of them came up in a live stream that I was hosting, and coal companies are looking really good. So I'm going to take a deeper dive into Alpha and see what's going on there. Fair Isaac is showing up. Occidental Petroleum, of course, Warren Buffett's a big investor there. Energy, oil, and gas is really beginning to catch a little bit of fire. I think higher oil prices are beginning to make those stocks really work. Of course, you got Apple in there, and I don't understand why they would label Apple as a big bet. They're already a massive market cap. I consider a big bet where you have a small cap company that can double, triple in value in a short period of time. I don't know that Apple's going to double anytime soon. You got things like Green Brick Partners. And again, CRM, I don't know that I would put them in the big bet category, a little too big. But things that I think are big bet category items are like Carvana, Alpha, Oxy, because Oxy isn't that big compared to Exxon or Chevron. So interesting. So I'm going to draw AMR. We'll take a deeper dive at that one. But if we go down further, the top buys in the last quarter, United Healthcare showing up again. So again, United Healthcare, Elevance, those type of healthcare payers, it's getting a lot of attention by these really good investors. Of course, Microsoft is there. They're a top two market cap company. Uber, awesome. So I'm an Uber stockholder. I really believed in this company, and it looks like super investors are believing too. Apple, of course, I think it's the most valuable company on the stock market. MSCI, and I took a quick peek at this one. These guys provide data within the financial services, or excuse me, financial markets space. Looked interesting, but not a deep dive stock for me. CVS, I've been buying into CVS, believe there's a lot of value there. Solventum, this is a spinoff from 3M. They do medical devices and so forth. They're accumulating this stock, which is interesting. Humana, which is a healthcare payer. So again, back to healthcare, we got 1, 2, 3, 4 out of the top 10 stocks that are being accumulated by super investors are in healthcare. I've been sharing with my community on live streams and on videos that I think healthcare has a really good forward 12 to 24 months. And I'm glad to see super investors are agreeing with that observation that I have and the plan that I'm making, which is buying into healthcare companies. I've already got good healthcare companies in my portfolio. And I'm going to continue to do that. Let me take a deeper dive into Solventum. I have a full CVS video on my channel if you want to take a look at that. I have a full Uber video on my channel if you want to look at that. I've got Microsoft on there. And I've got Apple on my channel. So if you want to look at that, Adobe, that's another big bet that I've been making because Adobe is such a quality company and they've been discounted lately. So I'll gladly buy a great company like Adobe. They're number one in their space. Nobody comes close to them. And I'm glad to see super investors are also buying into Adobe. These things help me calibrate what I'm doing right and what I'm doing wrong. I saw Adobe was discounted. I felt like this is a really worthy investment. I jumped into that stock. I've been buying into Adobe. And it's a little vote of confidence from super investors that, hey, I'm doing the right thing. I'm seeing that Adobe's discounted. I'm seeing a good company and buying into it. So that's good to see. And I've got a full Adobe video on my channel as well, if you want to take a look. The last 2 quarters, a little more United Healthcare, Microsoft, Apple, Google Alphabet. I'm buying big into Google Alphabet. Charter, that one's a little bit of a surprise. I feel like Charter Communications is a little bit too much in legacy cable channels, which is just getting depleted by the streaming companies. So that one's a surprise. We got Adobe again, Starbucks. Starbucks is having a great week, and it looks like super investors saw that there was value there. That's been kind of one of the bets that I made recently. Put it on my channel that I believed in Starbucks, and it was really, really great to see that the new CEO really created a really big rise in Starbucks. And of course, we got Uber and then Google again, because Google trades on 2 symbols. But Google is one of my biggest stocks. I believe it's the second biggest position on my portfolio, and I continue to buy into it just because their business is so darn strong. They just keep getting better. And I believe that it's a very good proposition for me. So I've got full videos on Google if you want to take a look at that on my channel. So the one super investor portfolio I'm going to take a closer look at is Pat Dorsey's portfolio. I read his book and I really liked it. In fact, I kind of feel like Pat Dorsey is the newer generation investor that I really looked for ideas on how to really manage my own fund. So I encourage you to read the Pat Dorsey books. He's really sharp. He really is accomplished, and I really like his books. So overall, his holdings include Meta. That's my number 1 position. But the stock that stuck out is Smartsheet. That's interesting. It's a smaller software company, a tiny software company. I'm going to take a closer look at that. And then the other one was SPT, Sprout Social. And these guys are somewhat of a platform slash software company that helps companies really manage their social advertising, like on social platforms and so forth. That looks interesting. Let's take a closer look at that one. So what did Pat Dorsey buy in the second quarter? He bought some AutoZone and Sprout Social. Interesting. Now, I've looked at AutoZone. That's not the right stock for me. It's a little too much of it's probably going to go sideways, maybe appreciate a little bit. I'm looking for some big winners, and Sprout Social looks interesting. I'll take a closer look at that. What did he sell? Some Smartsheet. He does have a giant position there. He sold some PayPal. Interesting. Upwork. He sold some Meta. That's his biggest position. And he sold some Google. Okay. But I got some good ideas to go with. Let's get into it. So Smartsheet is a small company, $6.7 billion market cap. And they have revenue of $1 billion. This is a newer company that has been around. Their 5-year doesn't look great. Their 1 year, the stock has gone up 22%. Year to date, it's only up 3%. So that's interesting. Maybe there's an opportunity here. Looking at their forward P, it's going to be 37, which is good to see. This is a newer company and they're already profitable. Analysts think it's a buy, but it's not heavily discounted. When I look at their revenue growth, very good revenue growth. So they are already a $1 billion run rate company. They're growing at 22%. That's very good. Software of this type, this is kind of a new category within software. This might be a really good acquisition target for a bigger software company to acquire a Smartsheet and then have this capability available to their customers. And that might be a play. So I like the revenue growth in Smartsheet. What I also like is their free cash flow. The free cash flow is positive. That's always good to see that a company is cash positive young in their life. And they are cash flow generating. So when I run the cash flow just back of the envelope, I get to a valuation that looks pretty decent. So I'm going to do a deeper dive into Smartsheet. This video is really just to find ideas that really require additional investigation analysis to come to a conclusion. So I'm not making a conclusion whether I'm going to buy or not buy Smartsheet on this moment. I'm just saying, hey, this is an idea worth chasing, and I'm going to go dig into it even more. Sprout Social is, what I like about having kind of a high level approach is you find companies that you never even knew existed. And this is one of them. I never knew they existed. And they do provide a platform that helps companies really operate their web-based social media management. So, that's where companies advertise these days. They advertise on Facebook, they advertise on YouTube, Google search, and this company will help those advertisers better manage those investments in their advertising. Over the year to date, it's down big time, 47%. Holy smokes, what's going on? It's down 28% for 1 year. Over the 5 year, it's seen better days. So what's going on with the company? So it's a tiny cap, 1.8 billion. Revenue is at 375. I like this space. I think the space is prosperous. It's not going to slow down, just more advertising on social media. Forward PE, 54. Okay, they're going to be profitable. So as we look at their revenue, green on the screen, very good. So these are good companies that are growing. And this one is generating free cash flow. So as I look at the companies that are generating free cash flow, great revenue growth, profitability in the next 12 months, it really creates an opportunity. Small companies have not kept up with the giant market caps stocks. The Magnificent Seven have taken the lion's share of returns for the last year and a half. And small caps have not really participated in that great rise, but maybe they will. This would be a nice idea to take a look at and see if this might be worth an investment. So I'm going to put this one again in my watch list, do more analysis, and then make a decision whether I'm going to buy this company or hold off. Look for videos on Sprout Social or Smartsheet on my channel in the future. Let's get out of technology and talk about a company that finds coal, gets it to market to turn it into steel and other products. This company is a $2 billion market cap company. Super investors believe in it, and its revenue is higher than their market cap. Interesting. PE is really low. And I think what super investors might be thinking is that commodity prices are really low, which might be driving the valuation of this company, but they're not going to stay low forever. The economy is going to turn and steel demand is going to go up. The demand for coal is going to go up. Commodity prices rise, and bingo, you got a really nice winner. So I think that's what might be going on. And I've looked at a couple of coal companies recently, and I like what I'm seeing. I'm seeing really low stock prices. We're seeing that commodities are bringing down the revenue, but it's not the company's fault. And when commodity prices rise, you get this type of growth. So we're seeing red on the screen. This is a cyclical industry. When it turns around, boom, if you bought low, you're going to see your stock price go high. So I like what I'm seeing. Cash flow looks good. Historically, their cash flow has been really good. Look at that, 1 billion in free cash flow. And the market cap of the company is 2 billion. Wow, that's a very good return on investment. So if they can come back to getting anywhere near $1 billion of free cash flow, it's almost a 50% yield of free cash flow on the market cap. That's tremendous. So Arch is going to be on that list to me to do further analysis and see if I want to buy some shares. But I've looked at a couple coal companies. I'm probably going to do a coal stock video and see which one is the one out of the pack that I like the most. And I'm probably going to buy some shares. And then the last one we're going to cover is Solventum. I'm a 3M stockholder. I received some shares in this company, and I ended up selling them because it was just kind of early in the whole time frame that this stock's been public. They just got listed less than 12 months ago, and there was just not enough data out there. But the PE ratio is super low. It's in a category that I really like, healthcare device, and they announced their earnings. So I'm actually going to probably start with Solventum as my first stock that I'm going to do full analysis on and take a closer look because there's good value in this company. 3M is a quality organization. This company, Solventum, is basically the portion of 3M that sells to healthcare, medical offices, dental offices, and it sells them all of the products and items they need to serve patients. So really solid business, Their market cap is just a little north of their revenue. I mean, holy smokes, talk about value. And they are expected, they've guided that they're going to do free cash flow. So this is a really good idea. I'm going to start with this one and look for a video on my channel on Solventum soon. But that's how I'm getting to some new ideas on stocks that I could look at by starting with the super investor data on Datarama. That's how I get a couple ideas, put them into my process. At the end, I just don't blindly follow what a super investor does. I get the idea and then I put it through my process. And then if it fits my investing criteria, then I might buy. So that's my process. I hope you found the video interesting, and I hope you get a chance to look at this website. I hope you find some ideas for your investments and you strengthen your portfolios. Thanks a lot for watching. Good luck investing in 2024.